Hi guys and welcome to Investor's Guide to the Galaxy. It's your host Alex Ionescu. Snapchat down 39% today. Let's dive right into it. Snapchat stock price down today 39%. Year to date down 78%. Past year down 87%. Meta Platforms aka Facebook stock price down today 7.59%. Year to date down 50%, past year down 54%. Pinterest stock price down 13.51%, year to date down 50%, past year down 76%. Alphabet stock, Google parent company, down 5.63% today, year to date down 25%, past year down 19%.
Right now on this Friday morning, Snap shares are plummeting right now after the company's brutal earnings report. The stock is the number one trending ticker on the Yahoo Finance platform with very good reason. It posted its slowest ever rate of quarterly growth and a wider financial loss as ad spending slowed. On top of that, the company unveiled plans to slow hiring and withheld third quarter guidance. The stock has also lost almost 2/3 of its value this year. Not even too sure where to begin other than to say this is a bad quarter optically for the company. Really bad earnings call that I would say almost came out of the blue. Just the tone of that management team on this call regarding the pace of a slowdown in their business as it pertains to ads. It was very alarming. Now you have Wall Street out here, don't know where the heck they've been. They are downgrading the stock. I've got Deutsche Bank downgrading to Snap shares to hold from buy. Where were they a couple days ago? I mean, this is terrible. This is an awful quarter.
Fairly steady deceleration in demand over the last year, the company is saying. And it began with the platform policy changes that were implemented in Q3 of last year. And so with all of this in mind and the impending recession that a lot of companies are trying to price in to their own spending and cost restructuring as well, that is a red flag for what Snap will actually see with regard to the advertising revenue coming forward. The company not satisfied with the results they're delivering, regardless of the current headwinds, they said in the letter as well. And the visibility remains extremely murky or incredibly challenging, what the company said at this point.
Yeah, and they are authorizing a $500 million buyback authorization, but obviously that doesn't seem to be mitigating any of the pain here this morning. You mentioned the analyst coverage. There have been at least 8 downgrades this morning alone. But even going into today, the average price target on the stock is down 72% this year. I mean, it's in line with what we've seen in terms of the decline in the shares. And the average price target now just over $20 a share. What was interesting in looking through some of the analyst coverage this morning is obviously there are macro issues that are affecting Snap in terms of the declining advertising market. But many of them single out Snap as being more vulnerable right now. And there's one reason why, and that's TikTok. A lot of the analysts saying that Snap is more vulnerable to competition from TikTok even than some of its competitors, even though we know the likes of Meta products like Instagram and whatnot have seen a loss of share, of screen share, of time spent on the app to something like TikTok. But nonetheless, looking at, for example, some commentary from JP Morgan, which cut Snap to underweight from overweight, to your point, Saz. What were they waiting
this
for?
On Monday.
But they point out TikTok having an outsized impact on Snap's business, and that Google and Meta have more of a cushion, right? They're bigger companies. They have more to spend to try to combat this than the likes of a Snap.
I really like what you said there on TikTok because it brings back to, remember when Facebook shares declined, had that plunge earlier this year? It was that Zuckerberg acknowledging that TikTok was really starting to eat their lunch. But staying on that point, good comments from Deutsche Bank and their analysts on this. Perhaps more concerning, Ben Black says, the company highlighted increased competition for advertising dollars, and we think Snap may have been displaced by TikTok as the experimental platform of choice.
No doubt, because when you look at the lifetime value that you're going to see from users on the platform, TikTok is going to run away with it. Snap has seen waning relevance, I would say, for the social media platforms and thus for advertisers to be able to run their campaigns. And the marketing dollars, as you see them start to dry up a little bit more here, it's going to come back to who has the best targeting, who has the best cost per milli, or the CPMs, and the ultimate reach that you're also going to see because of time spent on the platform. That comes back to Snap, or TikTok rather. The algorithm is better there. It causes the rest of the industry to change the way that they operate, whether you're a social media platform or not. And for Google and Facebook, or Google and Meta, Alphabet Meta, whatever you're calling them, at the end of the day, their targeting ability is far better. That's why they're the duopoly in the digital advertising space right now.
This is almost a $10 stock. And I know there are people probably on our platform thinking, wow, this is a cheap stock. It's now $10. Let me try to pick a bottom. But in order to make that call, you have to have, I think, confidence that you will see a revenue acceleration from Snap into year end. Don't know what caused that. What would drive that? I mean, you have a major competitor in TikTok, and oh yeah, we'll hear from Meta/Facebook next week. Unclear what drives that revenue reacceleration and gets them back to profitability.
Just a little bit of context on that, by the way. The IPO for Snap was back in March of 2017. It was $17 a share. The peak close for the company, $83.11. That was in September of 2021. What's interesting about this, about where the stock is right now and where it could be going, the board authorized a stock split. Did you see that? But it's not happening right now. It's if the shares reach $40 in the next 10 years. I thought this was really interesting. Like, you don't usually see a split kind of
contingent on a
yes,
on a
exactly.
price.
And basically, this would also give one additional share to holders of Class A shares. That's the non-voting stock that's traded by investors. So I don't know. And it would also let the co-founders sell or donate shares. So, and by the way, Spiegel, I think, is getting a $1 salary for the next however long it is.
Yeah. Yeah. Probably just put that into the company coffers. They're going to need some cash.
Also slowing the rate of hiring as well as the rate of operating expense growth, the company said in the most recent earnings call as well here. All right, so Snap shares getting ghosted right now.
So Snapchat parent Snap reported its Q2 earnings after the closing bell on Thursday, missing Wall Street's expectation and sending shares plunging 23% in after-hour trading. Here's how the company performed in the quarter compared to what analysts were looking for, as compiled by Bloomberg. Revenue $1.11 billion versus $1.14 billion expected. Adjusted EPS, earnings per share, minus $0.02 versus minus $0.05 expected. Daily active users, 347 million versus 343 million expected. Average revenue per Snap user fell 4.5% year over year, and the company said it wasn't providing Q3 guidance given the current financial climate. The revenue miss was certainly disappointing, and I think it sort of confirmed ad spending is slowing. Hargreaves Lansdowne analyst Laura Hoy told Yahoo Finance Live. Snap's earnings could serve as a good indicator of the health of the digital ad market in general and set the stage for earnings reports from the likes of Meta and Alphabet next week. If it is a recession, is here to stay, it's pretty obvious that ad budgets will decrease and all ad-driven business models will have headwinds moving forward. Ad spending will decline and you will see weak revenues for all platforms: Facebook, Google, YouTube, Pinterest, Snapchat, Twitter, Instagram, and all others. But I believe this will be a short thing. Ad business on internet is working, so it will not go away in the future. Budgets will increase sometime in the future. And the hot take of the day, it's a meme that I've made myself. Hope you like it. Now it's even better because Snapchat is down 39%, not down 29%, and the market cap of Snapchat is only $16 billion now, not 19 billion. What do you think about all of this? I'd like to know your opinion. Please leave a comment below. If you like this video, please smash that like button for the YouTube algorithm so that other people like you see this video. And don't forget to subscribe to my channel. Thank you very much. I appreciate all of you that watch my videos. See you next time.